Welcome back to Investing Talk podcast. Today, we are focusing our attention on a company that's, well, it's been lighting up the charts, Lightbridge Corp, the advanced nuclear fuel innovator. Now, this is definitely a high-stakes, high-tech kind of play, and our core mission today is really to answer that big question you're probably asking. Is Lightbridge Corp stock a good time to buy right now, especially after, seeing its recent massive run-up?
Yeah, it absolutely is a crucial time to analyze Lightbridge because, look, this isn't some mature energy company we're talking about.
Right.
It's very early stage, an innovator operating really entirely on the promise of its own technology. So for investors, this stock is, well, it's kind of the definition of a high-risk, high-reward bet. It's centered completely on R&D success and, crucially, hitting those regulatory milestones. So the plan is, we'll structure our discussion by first tackling the foundational financial reality, which, let's be clear, is dominated by its pre-revenue status. Then we'll dive into the powerful market momentum we're seeing, the technical trends, and finally, look at the key catalysts that seem set to drive the next phase of price action.
Sounds like a plan. And before we jump into all that material, just a quick reminder, please do subscribe, like, and comment on this analysis. That support really helps us bring you more of these targeted discussions. And hey, if there's a specific company you want us to put under the microscope next, please just leave a comment below. We are actively looking at your requests.
Okay, let's start with the basics then, the fundamentals. When we look past all that daily volatility, Lightbridge's entire value proposition, it seems centered on its core technology. What exactly is the competitive advantage here? Why is their fuel proprietary? Right, so their primary asset is that intellectual property. Lightbridge has developed this proprietary nuclear fuel. It's designed to significantly increase both efficiency and safety in existing nuclear reactors. If we try to put that into maybe more accessible terms, most reactors run on uranium oxide fuel. Lightbridge is developing a metallic fuel. Specifically, it's an enriched uranium-zirconium alloy.
Okay, an alloy. And what does swapping out oxide for that alloy actually achieve inside the reactor? Is it just like a faster burn or something?
Not exactly faster burning. Think of it more like a crucial safety feature that's baked right into the material structure itself. That metallic alloy, it's designed to run cooler than the traditional oxide fuel.
Okay, cooler.
Yeah, running cooler means the reactor can potentially operate longer, maybe more efficiently, and fundamentally, it changes the safety profile. It offers enhanced protection against things like overheating or accidents. That unique selling proposition that improves safety and efficiency, that's what creates the technological moat, and positions them for potential leadership in the advanced nuclear fuel market.
That definitely sounds like a powerful long-term disruptor.
Yeah.
But disruptive technology, it takes cash, right? And it takes time. Let's look at the cold, hard financial facts as they stand today, because that's often what separates the dream from the actual investment reality.
And this is really the critical piece of information, the thing that makes Lightbridge such a speculative investment right now. If you look at the financials for the trailing 12 months, the TTM Lightbridge Corp reported, well, no revenue.
No revenue.
Zero. Zilch. Consequently, the gross margin is 0.000%. They're currently operating at a significant loss. They posted a net loss of negative $14.88 million TTM. That's as of June 30, 2025.
Wow. Okay, so if they're burning nearly $15 million a year with absolutely zero revenue coming in, that usually sounds like a ticking time bomb, doesn't it? Like they're waiting for a massive capital raise. How is the market justifying a stock price that's, what, over $20 now?
Yeah, that skepticism is definitely warranted. But you have to look a bit deeper at their balance sheet, and that's where the narrative shifts a bit. See, the losses are somewhat deliberate. They reflect a real commitment to innovation, driven mostly by R&D expenses.
Okay.
For example, that Q2 2025 earnings call back in August, they reported a net loss of $3.5 million for the quarter, and that was primarily driven by about $1.6 million in increased R&D spending. They are spending money, but it's to commercialize.
So definitely cash intensive. What's their runway look like? How much time do they have?
Well, despite that negative cash flow, their balance sheet is actually remarkably strong and clean. They have virtually no long-term debt, almost none.
Really?
Yeah. And as of June 30, 2025, they reported having $97.9 million in cash and cash equivalents.
$97 million. Oh.
Exactly. That strong liquidity suggests they have a pretty significant runway. likely years, actually, for this early stage development phase. And that cash buffer is absolutely crucial when you're betting on what could be a multi-year regulatory and R&D process before any kind of commercialization begins.
Right. That cash position buys them time.
Yeah.
Which is excellent context, yeah.
Yeah.
But the market isn't just reacting to their bank account stability, is it? They seem to be reacting much more to momentum lately. We've seen some really extreme volatility just over the last quarter.
Oh, absolutely. And that high volatility, frankly, it's expected for almost any speculative tech stock, especially one centered on a single, potentially game-changing technology. Their daily average volatility is currently swinging between like 9% and 12%. Pretty wide swings.
Wow.
Just look at September 26, 2025. The stock closed up 10.3% at $21.44. That just illustrates the sheer intensity we're talking about.
So technical indicators then.
Yeah.
They can often help confirm whether a spike like that is, genuine underlying strength or maybe just retail frenzy. Are we looking at a sustained upward trend here based on the charts?
Well, the technical analysis actually confirms a very strong sustained upward trend, and that is a significant bullish signal. The stock is trading substantially above both its 50-day simple moving average, the SMA, which acts as kind of a short-term trend filter, and its 200-day SMA, which is more the long-term trend signal.
And what's the significance of trading so far above those SMAs? What do those levels tell us?
Well, the 50-day SMA is currently around $15.26, and the 200-day SMA is way down at $11.08. The fact that the current price, over $21, is so far above both, it indicates that this upward momentum probably isn't just a flash in the pan. It seems to confirm a powerful embedded trend.
Okay.
And furthermore, other momentum indicators, they're pretty much screaming bullish too. The 14-day relative strength index, the RSI, which is basically our measure of the speed and stamina of the price move, it's sitting at 63.79.
63. So that's bullish, but not quite overbought territory yet.
Exactly. It's clearly in bullish territory, meaning the run-up could still have steam. But crucially, like you said, it's not signaling wildly overbought conditions just yet. Plus, the 3-month MACD indicator, which tracks momentum changes, that's also looking bullish. It sports the likelihood of further near-term gains.
Okay, so for the traders listening in, let's maybe identify those key trading levels. Where are the crucial support floors, the potential buying zones, and the resistance ceilings where sellers might step in?
Sure. For short-term price action, key support seems to exist right around the $14.29 to $14.26 range. So if the price were to pull back, bulls would likely try pretty hard to defend that floor.
Okay, 14.26 area.
Yep. And then looking up the major resistance level where sellers are probably waiting, that's pretty evident, between $15.20 and $16.34. If the stock can manage to push convincingly through that resistance zone, the momentum could really accelerate significantly.
1520 to 1634.
Yeah. And just looking ahead a bit, some third-party forecasts referenced in our source material, they're predicting a strongly bullish 3-month range, somewhere between $15 on the low end up to maybe $29 on the high end, potentially even reaching that higher end, say $28 to $29, perhaps by November 2025.
Wow. Those are some highly aggressive forecasts, which brings us to the core question, right? What generated all this excitement? Why now? It can't just be a positive SMA crossing, surely. We need to talk about the recent milestones, the actual tangible catalysts that generated this momentum we're seeing.
Right. And I think the single biggest foundational event happened back on June 30th. The company was added to both the Russell 2000 and Russell 3000 indexes.
The index inclusion.
Yes, and this is a massive deal, specifically for liquidity and, importantly, institutional fund flow.
Okay, let's define that for listeners who might not trade indexes every day. Why does being included in something like the Russell 2000 make such a difference, especially for a pre-revenue company?
It's largely mechanical, actually. You have hundreds of billions of dollars in assets, maybe more, that are passively benchmarked against those indexes. Think index funds, ETFs.
Right.
So when Lightbridge was added, all those institutional funds were essentially forced to buy the stock to match the index weighting, regardless of whether their own analysts liked the fundamentals or not. This immediately raises the company's institutional profile. It bolsters liquidity because there are more buyers and sellers, and it drives significant demand flow. We believe that's a huge component of this recent climb in price.
Okay, so institutional money is flowing in based on index rules, not necessarily just because they believe in the uranium-zirconium alloy yet, which is exactly why we need to focus on the R&D progress too. What major technical milestones have they actually hit recently?
Yeah.
Have they made tangible progress?
Yes, the R&D team has definitely been busy. Just this month, September 2025, they announced a pretty major milestone, the successful fabrication of those enriched uranium-zirconium alloy samples we talked about earlier.
Okay, they made the samples.
Exactly. And these samples are now being prepared for the next big step.
Yeah.
Irradiation testing at the Idaho National Laboratory. That's the INL's Advanced Test Reactor. This is the real physical step towards proving the fuel works as intended, moving towards eventual commercialization of Lightbridge fuel.
That sounds significant.
And critically, this isn't just internal progress happening in a vacuum. At basically the same time, industry partners submitted the very first application to the Nuclear Regulatory Commission, the NRC, for commercial use of that same fuel type. That's an essential regulatory step. It signals confidence from partners that the technology is maturing towards readiness.
Okay, that definitely moves the needle from just pure speculation towards actual execution.
Yeah.
Now let's look ahead then. What are the near-term events, say in the next 3 months or so, that could trigger the next major price movement? What should people be watching for?
All right, the immediate near-term catalysts really center on two things: reporting and rebalancing. First up is the Q3 2025 earnings release and the subsequent call. That's scheduled for October 21, 2025.
October 21st.
Investors will be listening very closely for updates on, well, two main things: progress on that INL irradiation testing we just mentioned, and any hint, any whisper of new commercial agreements or perhaps hitting further regulatory milestones. A positive update on either of those could certainly send the stock significantly higher.
Makes sense. And the second thing, rebalancing.
Yeah, secondly, we have kind of the follow-up effect from the index inclusion, the ETF rebalancing event. That's expected around November 7th. As these passive funds adjust their holdings periodically to reflect their mandated index weightings, this can cause significant trading volumes. And, as we've already seen with Lightbridge, potentially extreme volatility around those dates.
Right. And since this is such a speculative stock, we probably can't ignore the buzz, the rumors circulating on trading platforms, even if we have to take them with a huge grain of salt.
Yeah.
What are some of the unconfirmed rumors that might be driving some of this interest?
Yeah, this is where critical thinking is just paramount. While these are completely unconfirmed, there is circulating speculation about several potential breakthroughs, and these can absolutely drive short-term price action, whether they turn out to be true or not.
Okay, like what?
Well, we've heard rumors floating around about, say, impending memoranda of understanding MOUs with major utility operators. That would be big. There's also speculation about maybe an extended collaboration with the Department of Energy and INL beyond the current testing, or even chatter, about a potential takeover bid or maybe a licensing deal by a large nuclear conglomerate looking to secure this proprietary fuel technology for themselves. But again, it's vital to remember these are purely speculative rumors right now, but they are clearly influencing the current market behavior and sentiment.
Okay, that gives us a really full picture of the opportunity and the external drivers. But, we always have to introduce the necessary balancing act here. Every high-reward opportunity like this inevitably carries high risk.
Yeah.
We need to systematically outline what could truly derail this story. What are the major risks?
Oh, the risks here are significant, absolutely. And they're deeply intertwined with the company's core business model itself. The paramount risk, the number one thing, is simply the absence of current revenue and the complete dependence on R&D success and, of course, regulatory approval.
Right. The cash burn.
Exactly. That cash burn means that if commercialization timelines get stretched out, or maybe if the INL testing finds some unforeseen issues, well, further capital raises become highly likely. And that would almost certainly dilute current shareholders significantly.
Okay, that's the primary company risk. What about risks outside of their internal development? Sector risks.
Yeah, you absolutely have to factor in the significant sector risks. The nuclear fuel domain is historically notoriously difficult. It's dominated by huge regulatory hurdles, technical challenges, and frankly, public acceptance issues globally. Even if the technology itself works perfectly in the lab, bureaucratic delays, which, let's be honest, the NRC is kind of known for, could severely delay the path to actually generating profit.
Yeah.
And finally, the volatility risk itself is a threat, right? These shares are just prone to massive swings that can erase gains incredibly quickly, especially due to the speculative nature of the stock, and particularly around events like earnings or those rebalancing dates.
Okay. So what does this all mean then, when we put these strongly bullish technical momentum together with the pre-revenue reality and the high-stakes R&D? What is the overall investment thesis here? Where do we land?
Well, based on the analysis of all the source material we looked at, the overall rating lands pretty squarely in the bullish camp. We'd score maybe an 8 out of 10.
8 out of 10, okay.
But, and this is a major but, it absolutely must come with a major asterisk highlighting the risk involved. The rationale for being bullish is compelling, though. The company is positioned right at the forefront of a potential technological wave in nuclear energy. It offers significant long-term optionality through that proprietary IP. The technical indicators right now are strongly bullish, pointing towards possible further short-term upside. And we have concrete, near-term catalysts expected just in the next quarter that are clearly driving fund flow and interest.
So this really sounds like something for the investor with a pretty strong risk tolerance, maybe looking for two distinct types of opportunity.
Exactly right. I think it's attractive for speculative short-term trading, trying to leverage those event catalysts like the Q3 earnings report and that ETF rebalancing in November. But it could also be viewed as a high-risk, high-reward long-term hold for those investors who specifically want exposure to next-generation non-carbon energy solutions and are willing to tolerate the extreme volatility that's just inherent in funding these kinds of pre-revenue innovators.
Right.
So just to summarize, you are essentially buying a promise of future innovation, backed currently by a pretty massive cash reserve, but you are definitely not buying existing profits today.
And that leads us right back to the critical question, I think, that you really must consider before committing any capital here. Given that the stock is experiencing such strong momentum, driven heavily, as you said, by the somewhat mechanical nature of index inclusion, those Russell flows forcing buys, how much of the current 21+ price is truly a valuation of their actual proprietary technology IP, that long-term promise of safety and efficiency, versus how much of the current price is simply being dictated by institutional flow that has to buy the stock, almost regardless of the fundamentals at this exact moment. That ratio between the forced institutional demand and the underlying fundamental valuation, that seems like the single most critical factor in determining your own risk tolerance right now. Thank you for joining us for this in-depth exploration of Lightbridge Corp. We'll be back next time with another close look into the stocks that matter most to you.